Hello, everyone, and welcome back to the Traders Mind Chat live show. Today is a very, very special show because we have one of my longtime friends, well, one of the guys that really got me into the business here, Adam Sarhan. Adam Sarhan is he just wrote a brand new book called Psychological Analysis. This book is fantastic. I can't wait to dive into it with him. Like you can see right here how much I've been highlighting on here. And that's not the only thing that he's done either. Like he has the Smart Money Circle podcast. The book is number one, by the way, still number one on Amazon. And he's interviewed so many people on the Smart Money Circle podcast. You just have to go check it out here. $1 billion money managers. And this the season just goes on and on. It's a phenomenal show. I highly recommend checking it out. And Adam, welcome to the show. Welcome back.
Thanks for having me, Mike. It's a pleasure to be here, as always.
Absolutely. And so everybody here that's joining us live, thank you for being here with us. We'll be taking questions throughout, and we'll have an open Q&A at the end as well. So as we're talking, get your questions in. I see some people commenting already. Welcome to the show. Welcome, Imran, in the posting in the comments already. So Adam, let's dive in because again, like I
you have a lot of notes.
I think that there's I totally destroyed this book with all my notes and highlights, and like there's just so much great stuff in here. I want to ask you, right? Like so. When you're thinking about psychological analysis, it's such a huge topic. Well, what's the order of operations that you think that people should start with, right? Because there's market psychology, there's trade psychology, like analyzing like the individual trade, the psychological analysis that goes into that, and then there's your personal psychology.
Right.
Where should people start and why? And can you speak to that a little bit?
Yeah, there's a lot more elements too. But what is psychological analysis, big picture? It's the missing link, in my opinion, for fundamental and trading and technical analysis, excuse me. So whether you're a trader or you're an investor, there's two schools of thought up until now. It's either you study the fundamentals of the company, you want to look at their earnings, their sales, their return on equity, so on and so forth, their margins, cash flow, et cetera, or you study the technicals, which is the stock. And you look at the chart, the patterns, price, volume, MACD and the RSI and relative strength and so on and so forth. And they're both fantastic. Now let me start by saying that they are both absolutely fantastic. But for some reason, in my humble opinion, there's a missing element there. And I've been fascinated with markets. I started trading in high school back in the 90s when I was a teenager. I just fell in love with it instantly. I've always had a knack for entrepreneurialism. I started my first business selling blow pops and candy in middle school before the Costco's were really big and all that kind of stuff. And I fell in love with Wall Street because what really captivated my mind's eye was the scalability of investing. Is that the not the wealth, the money that's created, it's the freedom, it's the transformation, it's that. I think of like the weight of the world is on you when you don't have a lot of money and you don't know what's going on and you're kind of stuck. The fact that all that is just blown away from Wall Street or from investing in general, to me, is the single greatest element, the freedom and that just lightness and so on and so forth. The quality of life just improves when you understand what's going on. So from a young age, I started trading in the 90s, made all the mistakes you could possibly make. I was talking to you earlier about the song I'm Still Standing. I can't sing, so I'm not going to try to sing it, but I'm still standing. Yeah. One of those type of things where you get to, you learn and you observe and you make the mistakes and you recover from the mistakes. So I traded the 2000 dot-com bubble. I saw the dot-com crash. In October of 2002 was the bottom. And then you had the big rally from October of 2002 to October of 2007. I traded that. And then the 2008 meltdown was around for that, survived all of those, by the way. 2009 was the bottom, March of 2009. And then you've been really rallying since. You had a brief bear market in COVID and a few other deep pullbacks or corrections along the way. But really, it's been a really strong bull market since. So if you just use fundamental analysis, Mike, and you just use technical analysis, if that's all that was needed, think of tools in a toolbox. You have a hammer and you have a screwdriver. Then everybody would be rich and everybody would win. And the fact is, most people don't win on Wall Street. and in other commodities, futures, options, doesn't matter what it is that you're trading or investing in, most people do not beat the market, professionals and individuals. You talk about businesses solving problems. I'm all about solving problems. And the bigger the problem you solve, the better it is and more people you can help. So as a student of the market and someone who's had a passion to learn, and I started off knowing I don't know, right? So I didn't go to Harvard or Yale or, all that kind of fun stuff, work at big banks and, manage $1 gazillion, all that fun stuff. I've been a partner in $1 billion shop. But when I first got started, I had nothing. And I grew up with nothing, right? So I know what it feels like not to be able to eat, type of a thing, right? So having the journey from the fundamental analysis and technical analysis and banging my head, realizing there's a missing link. I didn't know it at the time when I got started, especially in my 20s and 30s, even my teens. I had no idea my teens, but even the 20s, I had no idea what was going on. But over time and studying the top 1%, the absolute best of the best, I realized that success in this business doesn't happen by mistake. It's not an accident. Someone gets a six-pack. Think of that, right? You don't just wake up one day with a six-pack. It takes dedication. It takes time, energy. You've got to do the sit-ups. So in Wall Street trading, it's not you can't tell me there's the efficient market theory or random walk on Wall Street, meaning there's no way to beat the market. And you have people like Paul Tudor Jones or William O'Neill or Jim Ropel or so on and so forth that just put these monster years up, year in and year out. Not 1 year, which could be a fluke, or 2 years or 3 years, but decades. Look at someone like Carl Icahn, or these are investors, and you've got active traders. They're the best of the best. So I've studied those people, knowing I don't know, like Aristotle and Socrates used to say. That's been my greatest asset. So I have one job, it's to learn. And as a student of the market, student of success, studied. And then after the fundamentals and technicals, realized that's not enough to beat the market. If it was, everyone would win. I came up with this third concept early on in my the back of my mind type of a thing called psychological analysis. And the whole idea there, Mike, is to really elevate yourself above the fray. There's a crowd on Wall Street. Think of the crowd. And then learn how to make rational, not emotional decisions with your money, especially when the bullets are flying. I mean, the markets are open and your P&L is going up and that your profit loss, you're making money, you're losing money, so on and so forth. So for me, psychological analysis, it's that mindset, but it's more importantly, it's more than just a mindset. It's the ability to step away from yourself, view yourself objectively, rationally, not emotionally, which is extremely difficult. And then more importantly, implement that week in, week out, month in, month out, quarter in, quarter out, year in, year out, and have the discipline to do the right thing, not what you want to do. And there's a huge, and I mean huge difference between doing what I want to do, eat the cookie, and then doing the right thing to do. What I should be doing is doing the sit-ups, just to use that analogy, because people can relate to the weight loss and sit-ups much easier than other subjects. So that was the basics of the basis in my mind's eye for psychological analysis. Take it a step further, Mike. What I realized was we're all the same. People are people. At the end of the day, if you make a bunch of money, are you happy or are you sad? Well, when you win, are you happy or sad? Forget the money, because people are emotionally attached to money, and money kind of messes up with their heads. If you win a lot, are you happy or are you sad? People like to win. It's very simple. When you lose, are you happy or are you sad? Nah, you're not really happy. I don't know a lot of people that are really thrilled when they take a big loss or they lose in anything they do. People want to win. So when I started realizing that people are people, and I would talk to people, I'm a contributor at Forbes, and I would interview these really big money managers. I work in big money management firms. I manage money for people. It became like, wow, it's almost like the Matrix movie, where it's like I started seeing things in a whole different light. And then I realized all of us think of like good and evil, or the bull and the bear, right? There's inside of us. And most people are doing this. So I came up with this concept of the smart money superhero and the dumb money beast. And I call the dumb money beast Schmelf, in case people aren't, here's the book, by the way, in case people aren't familiar. I put cartoons in the book. And there's a superhero and there's Schmelf. So what is Schmelf? You might ask, hey, Adam, what did you come up with that name? When my daughter was young, one night she was having a fit. She stayed up too late. It was our fault. She didn't want to brush her teeth. Well, not wanting to do the right thing to do versus what you want to do, right? She's having a fit. You know how it is if you have young kids. And when you're in that state of just pure emotion and crying, can't see in front of you, just going ballistic, you can't make rational, logical decisions. You're not going to do the right thing. The right thing to do is as her parent is to make sure she brushes her teeth. I'm not going to butt heads and yell at a 4-year-old. I never yell at an adult either. But let's just, that being aside, how am I going to break her out of that state? So unbeknownst to me at the time, it just spontaneously, it just said, oh, let me just get silly. Because laughter in my world is the best medicine. I like to have fun when I work and have fun with things I do and really enjoy my life. So I stood up and I went like this, Schmelf, and I made it thinking I'm stomping on an ant. And I got really silly. And Schmelf, and just started jumping up and down and got as silly as you possibly can be. And just how you started laughing, Mike, and you know, imagine a 4-year-old sees her dad doing this. And she's in that state of just not thinking, right? So she immediately, the cries turn to laughter. The laughter turns to the tears are gone. She's just uncontrollably laughing. I got really, really silly. And I don't know where Schmelf came from. It just came to me. And that was that. So in our house, whenever somebody is off or down or in a bad mood or whatever, it's Schmelf. And then all of a sudden, it snaps us out of it. And right away, or hopefully as soon as possible, we know it's Schmelf took over. And we all have states, right? People's states change. The market states change. You might be happy, you might be tired, you might be elated, you might be enthusiastic, down, whatever the case is. And the good news is we can control our states. So the Schmelf versus the superhero can beat Schmelf every single day, all day long. But you have to consciously be aware that Schmelf is taking over and quell it or just squash it or don't tolerate it. And that's the almost the battle between the conscious mind, the subconscious, or the unconscious mind. And you've got a lot more depth there, but suffice it to say, there's the smart money superhero inside all of us. The goal of the book is to bring out the smart money superhero so you can make better decisions, smarter decisions, and win at whatever you want to do, whether it's trading or it's baking a cake or it's just being successful in life or being happy, having better relationships. And I talk about cognitive biases and mental walls and all this other kind of fun stuff.
Yeah, the chapters on cognitive biases and mental walls were some of my favorite in there. Well, one of the things that you just mentioned too, it's kind of related to blind spots, right? Like, so how do we start to gain the awareness? And what happens if we do have a blind spot? And you go into blind spots in the book. I don't want to give too much away. Again, like this is such I would put this book up there with Douglas, with Tharpo, with all of them. Seriously,
Thank you.
I'm not just saying that because you're here on the show and we've been friends, but this book is a game changer. It really is.
So let me jump in for a second, Mike. So you ever do something and hit a wall? Because the audience might not be aware of what we're talking about. So before we go that deep, let's just back up for a second. Yeah. You ever do something and hit a wall? Of course, we all have, right? Who hasn't? So I call these things mental walls, not literally hit a wall. Like I'm not going to go hit a wall behind me. It's not that. There's mental walls. There's a learning cycle. Like you do something, you get a nice rush because you learn a lot, and then you plateau, and then you hit a wall. Most people hit that wall and they stop and they regress. The top 1% not only break through the wall, they excel again, then hit another wall, break through it, so on and so forth. They keep doing that. That's the success cycle. But not. And again, this doesn't just come from me. Tony Robbins talks about this, lots of others, and it's just how life works. It's another one of those that Dalio talks about, right? So you hit the wall, you either break through the wall, you anticipate the wall, you break it down, or you stop and you back off and say, no, I can't do this, and you get scared and fear takes over, or you look somewhere else because the wall is pain. People are programmed from our ancestors, but it doesn't matter. We're programmed to what? Seek pleasure and avoid pain. Stove's hot, you touch it, you're not going to touch it again, most likely, for sane, rational people, that is. So mental walls, Mike, are these things that are created in our reptile brain or the unconscious mind or whatever, subconscious mind, whatever word you want to use. Semantics doesn't matter to me. It's just the concept. I'm more of the spirit of the law than the letter of the law kind of guy. I'm a big picture kind of thinker. So I know the brain is a very simple machine like Dalio talks about, right? There's a machine, there's input, there's output. So if you understand how your mind works, if you have a mind, you have what they call cognitive biases. Again, this is in psychology. It's not me. And I'm not a psychologist, by the way, which I know I'm never trying to be a psychologist. All I am is just a student of human nature, of behavior, of so on and so forth, and practical things that work. It's all I am. So there's cognitive biases. If you have a mind, you have biases. That doesn't mean there's no judgment. There's no negativity there. You're racist, not racist. That's not nothing, none of that nonsense. It's just there's biases. What are biases? Anchoring is a bias, right? Confirmation bias. People look for information that confirms their preconceived notions. Take a hot topic like vaccines. People that are vaccinated look for confirmation saying the vaccine's good. People that are not vaccinated look for confirmation saying the vaccine's bad. People that are bullish look for information saying I'm bullish. People that are bearish look for information that's bearish. Whether or not the market's going up or down has no bearing whatsoever out of 9 out of 10 traders. And that's why most people are just oblivious to being successful, because they don't understand how to make rational decisions and look at the information objectively. They're doing it with all these different biases. If I'm only looking for bearish information and the market's ripping higher, I'm not long. I'm frustrated. I'm angry. And now the cycle perpetuates itself, right? I'm going to get more emotional, more angry, more frustrated. I'm looking for more bearish information. Meanwhile, the market's going straight up. And who's losing? Who's missing? Who's getting hurt here? Me, not you, not the market. Nobody cares, but I'm hurting myself. I did that for so many years and so many other people. And there's other ways too, where you're bearish in a bull market, you're bullish in a bear market, whatever the case may be. You have your preconceived notions, your biases impact the way you see the world and the way you see information. In the Steve Jobs movie, I can't remember which one. There's been a bunch of Steve Jobs movies, but there's one where he had like a distorted view on the world, right? Where he would see things, the Time magazine image was like totally different than what it was. So, your mind plays tricks on you. It's part of the way that we're structured. Not bad tricks or good tricks. It's just you have to be able to have what Dalio talks about, and Jim Ropel talks about this, guardrails. You want to create these guardrails for yourself so you protect yourself from your own schmelf, for lack of a better word.
That I love it, and you know what? Well, when you were just talking a lot, like you even gave me a light bulb moment in there too, in that when we approach the market, or when I used to approach the market this way too, developing some kind of a bias, long or short, well, whatever, and then beginning to do my analysis, right? And so, from Jump Street, you're automatically looking for certain things. Well, when I shifted towards it, and again, I appreciate you even mentioning the anchoring bias here, because now it's just yes, this is what I've gravitated towards. It's kind of like making cake, right? Right. The last part of it is putting on the icing. You wouldn't ice the cake and throw it into the oven. It's the same thing. So starting from a place of objectivity, going in with as few biases as possible. Well, Matt, let me ask your opinion on this. Are there biases that we would enter the market with that maybe we're unaware of? And well, how can we is that problematic?
So yeah, there's a lot of biases. So we all have mental baggage. You go into a relationship with somebody. If you're married, you're single, you're dating, it doesn't matter. You meet a friend, a business colleague. People come to the table with baggage, right? And the more you let your past and or your mental baggage interfere with the present, the worse your future is going to be and your present is going to be, right? So the think of it as adulting. There's a word called adulting when kids have to grow up.
Yeah, I've heard this.
Yeah, so most people don't go through the adulting process. And some people go through it really late in life. You've got grown-ups that behave like kids and young kids that behave like grown-ups. So for whatever reason, it doesn't matter, but that's just, the reality. So if you can't, I'm a very simple kind of guy where it's 1 + 1 = 2, the lights on or off. In the book, it's binary. There's risk, there's reward. You're up, down, lights on, lights off, so on and so forth. So I keep everything super simple. So, a 5-year-old can understand it. A 15-year-old can understand it. Somebody, you don't need to be a rocket scientist here to understand the concepts in the book. So, Maslow's hierarchy of needs.
Yep.
Before you get to you basically need food and shelter, and then you've got a bunch of other ones. You get to the top, it's self-actualization. So in the book, I've got my own type hierarchy of needs for traders, which here there's dream it, do it, and then live it. So when you come into the market thinking the market's going to take money away from you, is that a smart money behavior, or is that the dumb money behavior? Again, it's binary, right? So I think of circles. There's a smart money circle, the top 1% or the top 5%, and then there's everybody else. So most people just reside in the dumb money circle. There's no judgment. It's just the fact. Most people's performance, just rating the performances compared to the market or compared to their peers, don't beat the market. And then there's a very small percentage that do almost every year, decade after decade, long-term returns. Nobody wins every single day. Nobody wins every single month. Nobody wins every single year. Even the best traders in the world have down years, or most nobody, let me put it that way. So, if you go to the table thinking, hey, I'm going to get to self-actualization before I get to just food and shelter, again, icing on the cake before when you put it in the oven, it's not working. So if you come to the table not even aware, and this is what happens to so many people, Mike, is that they're not even aware they have these biases built into them or the baggage and coming into the relationship. And then the relationship fails and they wonder, how come it failed? And they go to another person and it failed and it failed. After enough failure, it's like, it's me, it's not you, right? So that's what happened to me with the market, where it's like, all right, so many years, it just didn't work. And it's like, all right, at the end of the day, it's like, what's going on here, buddy? It's not the market. Wealth is trillions of dollars are being created out of the market. This was back in my really, really early days. And I realized it's me, user error. When you have a technology thing and you call for customer support and, they say, oh, user error, whatever it is. That's me. I'm that guy. I make all the mistakes. I'm lucky if I could tie my shoes in the morning, right? So if you're not even aware of these biases that you're bringing to the table, and by the way, the mental baggage from your past, it's going to be very difficult to have a healthy relationship with the market. And that's critical, Mike, to understand that we all have relationships with money, with health, with other people, with ourselves, with the market, so on and so forth. And if you're not even aware of those relationships and what that mental baggage is and or what your pre-existing default setting is, then it's going to be extremely difficult to thrive. I mean, look, I grew up in a world where pessimism was the language that they spoke. I mean, nothing against my parents, nothing against my family, nothing against anything. It's just the environment I grew up in was a environment where pessimism resided. Now, there were some optimists, don't get me wrong, but the default setting was scarcity, right? I can go into it, my, depression, and the grandparents, they came from out of the world of the Great Depression. Not that they were depressed, but they lived in the Depression period and, so on and so forth, and difficult times and yada, yada, yada. It doesn't matter. When I realized that unbeknownst to me, my default setting was a pessimistic outlook, I had a choice. I can keep that outlook or I can change it. It's just that simple. Just because you've been doing this for so many years doesn't mean you have to keep doing it. And that's really huge. So when I realized I have the power to change the story I tell myself, I could change my identity. I can change my relationship with anything, that is, including myself or with money or with the market or whatever it is. That is tremendously empowering or not empowering, right? It's tremendously empowering. It gives you a whole different world. Because now when there's a trigger, there's an event, you buy the stock, it goes down, you have a stop, you're out, or you lose money for any reason. You're no longer, full of negativity. Enter any word you want. Everyone processes things differently. When you understand that losing is part of the process, you can change your association with that loss. So think about this. If you drive to work in rush hour traffic, I don't care where you live anywhere in the world, and you get stuck in traffic, you have a choice, right? When you're in that traffic, to either be angry, road rage, pissed off, mad, enter any other negative emotion you want, or to be happy. Well, Adam, how could you be happy if you're in traffic? Some people might ask. You understand? Think if there's two cars right next to each other. One guy's got full of road rage. The other guy's got his hair down, music is on, and he's loving life. Which person do you want to be? I'm not saying to be a pushover and be stuck in traffic and take the lumps and, okay, I can't do anything about it. No. The second you can get out of traffic, get out of traffic. But until you can get out of traffic, you have a choice. You can't control what happens to your life, Mike, but you can control what? How you react to it. Yes. I want to be the happy guy in traffic. Get out of traffic. I want to be the guy out of traffic. But if I'm stuck in traffic, if those losses happen, they do happen. I will hit traffic in my life. It's going to happen. I'm going to choose to be happy. End the story. And when the lane's open and I'm flying down the highway, cruising, loving life, and I'm taking win after win, I'm up big, I have a big cushion for the year. Guess what? I'm choosing happy. Understanding that you are not your trades. You're not your self-worth, which I used to identify too. I got a series of wins. I felt really elated and happy. I got a series of losses. I feel like, crushed. It's not the way the top 1% play the game or invest their money. I don't mean to play the game as it's a joke. No, it's not. It's anything but. It's extremely serious. It's a business, yada, et cetera, et cetera. But that's how they operate. They operate from an understanding that if you drive to work during rush hour traffic, there will be times where you have traffic, and it's okay. That's the beauty. The traffic's not going to last forever. You're going to get out of the traffic. Drawdown is traffic and trading. You're not going to have a drawdown where let's say you make a bunch of money, your account's at 100, and then all of a sudden it goes down to 95, then to 90. You're down 10%. Oh my God, you're in a drawdown. You have a choice. I'm not saying to take your lumps and be happy. Yeah, I just took a loss. Yay, and celebrate. You can if you want, but at least understand that it doesn't have to crush you. Because when you're operating from a position of crush after crush after crush, you're weak. You're not strong. And that's not how the people in the smart money circle work. So my whole goal is to help people enter the smart money circle. Hence the name of Smart Money Circle, right? .com. So by interviewing the top 1% and by studying them, and more importantly, studying success in all endeavors, it's not just trading. This book applies to just about every aspect of your life. A big focus of it obviously is trading and investing. But look at any performance-based business, whether you're an athlete, Michael Jordan, Kobe Bryant, you're an entertainer, you're a movie star, you're an actress, or you're a singer, whatever the case is, you perform. You make gobs and gobs and gobs of money if you perform well, right? How much does the top, the best athletes in the world make? Millions and tens of millions of dollars, if not hundreds of millions of dollars, right? Over the course of their career. How much the best, George Clooney or, Seinfeld or whatever, Larry David or whatever it is, right? Enter any A-list actor or actress. What do they make? Tens and tens. They perform well. They get paid very, very well. This business is the exact same thing. By the way, if you don't perform well, you sit on the bench. You're just benched. The coach is not going to let you play. But if you perform well, you go out and play. In this business, it's not that environment where there's a team sport or so on and so forth. It's more like a tennis or a golf where it's me, myself. I always joke around. They're like, oh, yeah, who's working with you? What are your analysts? Blah, blah, blah. I always joke around. There's three people. It's me, myself, and I, where I've got to really focus, and you've got to focus. And the traders, if you have a team around you, which is extremely important, the biggest hedge funds and pension funds and sovereign wealth funds have a team. There's an investment committee. I used to think mistakenly, oh, I can do everything myself. It's me. I was talking to you about this earlier, remember? I have to pick the trades. I have to do all the analysis. I have to do all the work. Me. Wrong. I'm not saying that one person can't do it. One person can do it, but you don't have to. It's the having to, right? It's good to have a sounding board, have a team of people that you trust. Dalio talks about triangulating, right? You take these ideas and you want to throw them out there to other people that are hopefully smarter than you and can give you feedback objectively over the decisions you make. The whole goal is to help you make the smartest and best decision you can. What's the next smartest decision I can make right now? And then right now. And when the facts change, you change. That's simple.
Yeah, like I remember you teaching me that lesson so many years ago that it's basically like you make the rules and whatever so if you're in charge of making the rules, make them in a way that it works basically. And the part about having to select the trades yourself too, there was that point nearly 7 years ago. At this point, Lily's going to be turning 7. My daughter is going to be turning 7 in a couple of months, and so way back when she was first born, I was or before she was born, my trades were finally working. I had year over year of consistent success, and then after she was born, my trading took a hit, and it was back to boom and bust. I'm like, well, what in the hell is going on? And so I talked with Adam, and part of it is that hey, you have a major new thing in the mix, your kid. So what I ended up doing, what worked, was rather than doing my own research and analysis for a while, I started to use Adam's. And because and it wasn't just picking some random person off the shelf. We had already known each other for several years. We have a relatively similar style. So it's like, okay, I feel comfortable outsourcing that part of my trading to somebody else. And uh, the returns that year were phenomenal.
Yeah, no, I mean,
Like
the
60,
reason.
70% like jumps out at me as a return that year.
Sorry, say again, Mike.
Yeah, well, like that year, like 60, 70% like jumps out at me as like a return, and
Yeah,
for so little time.
yeah. So the reason why I made FindLeadingStocks.com, which, by the way, to all of your viewers, you can use Mara, MARA. You get a 10% discount when you check out off of any level, is
Oh,
for
that's
that exact reason. I wanted to be. I used to work as a consultant to big hedge funds, and I would give them trading ideas, and that worked out very well. But it was very time intensive. It couldn't scale. And I'm all about scaling, right? I want to help as many people as possible. And like I wrote a book. I wrote it one time. I can, theoretically, everybody in the world could possibly read it. Not to say everybody will, but it's scalable, right? So I couldn't take the phone calls all day, every day. And it got to the point, this was also back in, over 20 years ago. So it was very tough to scale. And then when I realized the online newsletter business, what is the idea of a newsletter membership? I was like, wow, I can write this report once a week, make it very simple. You had a full-time job at the time, and I worked a lot, and I know many of our members have full-time jobs as well, and I can give them my ideas. Once a week, you get 3 actionable ideas, 4 or 5 actionable ideas, whatever the case is, and with intra-week updates if they want the aggressive plan, and that's that. And then people, theoretically, everybody in the world can subscribe, right? So it was a way to scale the time, and that worked out extremely, extremely well. So that's one way, but find the smartest people you can find. And, you don't need 50 or 100 of them. One good idea could change your life. And, one good stock, and you sink your teeth into a true market leader, or the TMLs, like they call them, could really, really, really just absolutely change, a lot. So like what you did, Mike, and so many others. We had another guy who bought a house a few years ago with the down payment, literally from the profits from the newsletter. He's a guy in the service, and so many other stories like that. That gets me going, and that really, really, really warms my heart. So that's a great way of saying, oh, let me get an outside objective opinion on what to do. Maybe you might have a bullish leaning and the market's bearish, or vice versa, and you're reading me and I'm bearish and the market's bearish, or whatever the case may be. At the very least, you can be like, oh, wait a minute, maybe I should double check my ideas. Or I might give you a stock that you didn't find that you might be like, oh, wow, well, let me do some more research on that, and I like it. You don't have to take the trade. You like it, you take it. It's just that simple. So all that's available on FindLeadingStocks.com.
So let me ask you this too, because this is something that I struggled with for way too long, and one of the reasons why I struggled for the first decade of my trading. I've been trading for over 20 years now. The first decade was an absolute nightmare, and one of the reasons why is because I had this bias against trusting other people.
Yeah.
Right. So here's somebody like yourself that's able to help. But well, what if I'm somebody that I don't know if I could trust this, or maybe this guy's gonna take my money and go run to the Tijuana or whatever. That. How do you get past something like that's just this voice in the back of your head that keeps on preventing you from moving forward?
Anything worth doing in life, you have to trust other people for big things, right? You can't do everything by yourself. It's not possible. If you want to go to the supermarket, if you want to eat, you have to trust other people are going to make food available for you. Even if you're a farmer, you're going to need other services, doctors, or whatever the case may be. So part of life, fundamental principle in life, is being comfortable with the ability to trust people. Now, have I been burned? Absolutely. Have I had, all the crazy possible, not all, but a lot of crazy stories about people embezzling and cheating and ripping me off and so on and so forth? Yeah, unfortunately, these things happen. Now, the way you overcome that, Mike, is by doing what Ronald Reagan says. You trust, but you do what? You verify. So what does that mean? You sign up to someone's newsletter, you pay a couple bucks a week for it, or whatever it is, $100 a month. You pay $500 a month. It doesn't matter. What's the worst that happens? You don't like it, you cancel. Okay, what if you like it? $100 a month. You think it's going to do anything for you? No. $25 a week. Well, guess what? One good idea, you're going to make thousands and thousands of dollars off of it. Like you said, a 60% return, and you could focus on what? On your wife and your kid. And guess what? You built the foundation to quit your job after that and have a whole life of freedom, because not because of outsourcing trades, but because you were able to get your life together and have that step back from the madness, so to speak, and your whole life changed. Now, the transformation, Mike, getting over trust. If you, I've never wanted to ask you to give me money. In fact, not at all. But if somebody's going to give me money to manage for them, or to run the newsletter, or sign up to the newsletter or something like that, there's got to be an element of trust. And if you don't trust that person, then by all means, don't do business with them. It's just that simple. And even if you do trust them, make sure you can verify. You give someone money. I'm not saying write a check out to Adam Sarhan and give me $10 million. Never would do that. You put an account, however you want to set it up. If you're in the newsletter business, what's the worst that happens? You sign up to the newsletter for Find Leading Stocks, and then what? You don't like it? So what? You get my point? Like, what's the way that I overcome trust, to answer the question, is I look at the absolute worst case scenario. If I do this, what is the worst thing that can possibly happen? If I'm okay with that, when I get to a stock, before I enter, I do what? 3 things. Where am I going to enter? Where am I going to exit? How much am I going to risk if I'm wrong? What's my maximum risk? If I get that down comfortable, I'll take the trade. If I'm not comfortable with the worst case scenario, I'm not doing it. And that's how I trust but verify. What's the worst thing that happens if I keep using the newsletter example. If I do business with Mike, if I sign up to your consulting service, Mike, right now, what's the worst thing that happens? I'm not happy. I'm going to cancel. There's no contracts. Simple. So that's how I each trust but verify. Now, if you ask me to give you a check for $1 million in your name and I can't see it, I don't know what's going on with it, just hope it works, and there's no verification there's no way for me to get my money back, God forbid something happens, I'm not doing that. So I hope that answers the question.
Yeah, it absolutely does. Tied into that too is, I think, the awareness of your state.
Yeah.
Right? Like your current mental state. So if you're in a if you feel like crap, like you're more likely to make crappy decisions, right? Like technical terms. If you're feeling strong and confident, then you're more likely to make better decisions. Well, what if you're in a cruddy state? How can somebody recognize that they are, right? Like, because when you are feeling like that, it's not always easy to realize it in the moment, and then you make like a shitty trade, and then the half your account is gone, right?
Yeah, that's a great question, Mike. The way that you have to understand, first off, recognize that your state changes, and recognize that you can be aware of the state that you're in. That's self-awareness. That's like step 1, right? Think if you want to solve a problem, you have to recognize you have a problem, right? So they talk about that in AA or whatever the case is. Like, okay, step 1, I've got a problem. Acknowledge the fact that your state will change. You're not going to be happy and elated all day, every day. You're not going to be sad and bummed out and depressed all day, every day. Will your state change every once in a while? Will you get angry at some point and frustrated in life? Absolutely. You're human. Who's not going to get upset or frustrated because something happens that they're not happy with? Now, once you understand that your state will change, let's keep it binary. You're either happy or positive state or a negative state. Let's put that, right? So positive up here, negative down here. Take your temperature. How do I feel right now? Blah, up or down? The market can only do 3 things. The market can go up, it can go down, or it can go sideways after you enter a trade. Same thing. You can either be positive, blah, or negative. So if you're in a blah state, I'm going to put that into the negative camp, because what is blah? It's not really positive, right? Nobody wants to walk around. How you doing? Blah. That's not a good state to be in, right? So I'm going to put that in the negative state. So if you're in a negative environment and mindset, recognize it. Now, sometimes you're not really aware that you're off, right? My wife, God bless her, she tells me all the time. She's like, hey, what's up? Something's off. Not all the time, like I'm off all day, every day, but when I'm off, when Schmelf takes over, my unconscious mind takes over, I'm not aware of what's going on. I'm off. I'm human. I have off days. She'll bring it to my attention, and we've learned to do it lovingly and gently. And me, vice versa. When she's off, I'll tell her, hey, honey, you're off. That's it. That's the key word, the safe word, whatever it is, the trigger. Oh, yeah, okay, wake up. Then I can recognize I'm off. That's step 1. So once you're off, now you don't have to have someone else do that, but it's very easy when you have someone else do that, right, for you. But you can do it yourself. And you can just sit there and take a second. People like to meditate. I'm a big fan. Just take a breath. You don't have to sit here and do 100 deep breaths or anything like that. Just real simple. How do I feel? Look yourself in the mirror and just ask yourself, how do I feel right now? You're going to get a feeling. You're going to feel good. You're going to feel bad. You're going to feel blah. Like, you're going to positive or negative feelings going to show up. Okay. If it's not a positive feeling, if you can't answer the question or it just pauses, then you're off. Just enter off into the negative or blah category, right? So then you have a choice, either to stay off or to go on. It's just that simple. Well, how do you go on? Well, something happened, Adam. I don't like it. Well, all right. Have you ever seen someone who's paralyzed but super happy?
Yeah.
You ever seen someone who's a billionaire but miserable, or a super wealthy person miserable and kills themselves? You know, think about Robin Williams or Kate Spade or Anthony Bourdain. These are celebrities. They've got wealth, fame, money, fortunes, millions of fans. But Belushi, people kill themselves. What? Okay, you can argue one guy was sick, whatever, but something is going on there, right? Well, then you have people that are on the other side of the spectrum that are completely paralyzed but super happy. You can't control what happens to you in life, but you can control the reaction. So just because I'm off, enter any trigger you want. By the way, I slept in, I hit stubbed my toe on the way out of bed, I lost money in the trade, I've got to fight with my kids, my wife, whatever it is, myself, whatever, doesn't matter. You don't have to stay off. You have the power, again, thanks what's in the book here, you have the power to change your state. And you can change your state instantly. I don't care what is going on. The details don't matter. You might say, oh, Adam, what's going on? My situation's different. No, it's not different. It's another one of those, like Dalio talks about. Someone else has had something similar happen to them at some point in time in history. You might not be aware of it, but that's just the way it is, right? So once you're aware that your state changes, you have to take control. Part of the book, Mike, is what? It's learning how to take control. Yes. Take control of yourself. Take control of the decisions you make, take control of your actions, and guess what? Take control of your results, your life. That's the whole point of making smart decisions. So you get smart outcomes, smart results. So when you're able to understand your state changes, that's step one. Step two is to understand you're in control of your state. Just because you're off doesn't mean you have to stay off. That's huge, huge. Well, Adam, I just took 3 losses in a row or 5 losses. I got stopped at everything. My portfolio is down big time right now. So what? Scale back. You don't have to be in the market right now. Unload. Or you look at something and change your relationship with it. So I'll give you an example. I don't like jalapenos. I don't like spicy food, but I have prostate cancer in my family, right? My uncle died from it, so on and so forth. So I've been told, I don't know if it's right, that jalapenos are good for the prostate. Guess what? What do I eat now at least 2 times or 3 times a week? Jalapenos. I don't like them, but guess what? I'm not going to let Schmelf win. The superheroes inside of me, it's good for me. I'm going to do it. Same thing. Pain, pleasure, right? You talk about the short-term consequences, long-term consequences. You do something, it either gives you pain or it gives you pleasure. And you can change that relationship. Guess what? I used to associate pain with the jalapenos. Now it's pleasure because I know it's good for me. Same thing with working out. Why are most people overweight? If it's simple, calories in versus calories out. But most people in the world are overweight. Why? It doesn't make any sense. Or most people in the country, right? The reason is because going to the gym for them is considered pain in their subconscious mind. Schmelf doesn't like it. Sweating, it's hard. Working out, it's hard, so on and so forth. Being in shape, eating the cookie is pleasure. So what are they going to do right now? Eat the cookie. Next minute, eat the cookie. Next day, eat the cookie, eat the cookie, eat the cookie. And simultaneously avoid the gym. That's a recipe for being overweight. What do healthy people do? They break through that mental wall and they understand short-term consequence, I might have pain for going to the gym, but long-term it's healthy. Short-term consequence, I might have pleasure from eating the cookie, but long-term it's painful. And they focus on the long-term and they just reverse it. If I have pleasure going to the gym, Mike, you go to the gym, right? But you never used to. When you were younger, you never went to the gym. But now you go and you work out and you enjoy it. You've managed to switch the relationship from pain to pleasure because you understand how your state changes, how the results are much better, so on and so forth. And next time you have a chocolate cake with the icing or with the cookie, you might say, wait a minute, I might not eat the whole thing. I might take a bite or 2 bites. I'm not going to eat the whole cake. And those subtle but very important shifts, you're in control of. So you change your state by recognizing the state and then realizing you have the power to change it. And then don't tolerate the negative states. When you're in a bad state of mind, get out of it as fast as possible. My wife tells me I'm off. Guess what? wash my face with cold water, go for a walk on the treadmill, go on the bike, whatever it is I got to do to change my state, wash my face, whatever, jump up and down. Physical activity for people that are us like traders, where we sit in the desk for 8 hours a day, is so underrated, but so extremely important. I can't overemphasize that enough. That'll change your state. If you sweat, I almost guarantee you your state is going to change.
Absolutely. Dude, like that, there's so much gold in the last 10 minutes. like, oh my God. Like, I'm looking forward to going back, rewatching and replaying this so that way I could dig for all the gold. It's really like, dude, like you're helping like hundreds, if not thousands of people that are watching it and then rewatching it later on. Like,
thank you. My pleasure, Mike. It's absolutely my pleasure.
There were a couple of really good questions that came in from some of the people watching live. This one here from Imran. It says, my question is, what is the best suggestion how to accept the risk completely? So like you enter a trade and you're completely accepting whatever risks there are, right? So I'm assuming like capital risk, but there's all different kinds of risks that we could talk about too. Sometimes I get lost psychologically as I think I will accept the risk completely, but I don't.
Great question. It's real simple. Risk can be measured in the market, dollars and cents. Numbers are facts. I have 5 fingers on my hand right now. You have 5 fingers on your hand. That's not an opinion. Yeah, it's not an opinion. Someone's got 5 fingers. It's a fact. So if I have $5 in the bank and I lose $1, I just lost what? 20% of my money, right? Okay, that's a fact. I can measure that. You can control the amount of risk based on 2 things: the size of the position you take and where you exit after you enter. That's all there is. There's nothing else to it, right? I mean, you correct me if I'm wrong. So look at the things you can control, Imran, and everybody else for that matter. Write them down. Position size, entry, the distance between my entry point and my exit point. Doesn't matter if you're long, doesn't matter if you're short, doesn't matter if you're doing options or futures or stocks or currencies or crypto or LMNOP or QRS or TUV or even anything else for that matter. Just about every decision you make in the market, there's an entry point, and then you can choose the exit. Unless if it gaps down on you and you have a stop, then there's still ways you can buy puts, you can do other things. But for the most part, bearing a massive, huge gap down on earnings or gap up if you're short or some massive adverse move in the market, for the most part, you can control your risk. And even if you're going into earnings and you have a big position, you can buy, let's say you're long the stock and you're going to earnings, you can buy puts to protect it or offset some of that risk. And if the stock goes up or sideways, the puts will expire worthless. If the stock gets clobbered, you're going to reduce your downside and mitigate a lot of that risk. So the goal is, in trading, it's facts. It's based on numbers, right? Here are the numbers. It's 1, 2, 5, 10, 20, 30, 40, 50, 100. Money scales. That's another beauty of Wall Street, right? Or of trading in general. Money scales. But it's everything in trading and investing comes down to risk and reward. In my mind, and I talk about this in the book, I'm not buying Apple. Or Imran, you're not buying Bitcoin, or you're not buying, Google or ExxonMobil or, LMNOP. What you're buying and selling is risk. You're risking your money for the potential reward. Period. Doesn't matter if you're buying stamps or if you're buying real estate or if you're buying any other soybeans, corn, wheat, gold, silver, doesn't matter. Risk and reward. Why are you buying that stock or that currency or whatever it is, right? Because there's an expectation in your mind's eye, which is biased, by the way, that it's going to go up after you buy it. That's the bottom line. You could enter any other reason you want. I don't know anybody that deliberately buys something with the clear intention it's going massively down. It just doesn't happen. I mean, maybe it does. I don't want to speak in absolutes. Somebody wants to do tax offsetting or whatever, but the vast majority of people are trading risk, are buying with the anticipation that they're going to have a reward. Now, the reality of the game or the investment arena, the game that we're playing or this business, is that most trades fail. It's not me. It's not you. It's just the law of nature. And I got this from nature. If you look at an apple tree, Mike, how many of those seeds, thousands of seeds or hundreds of seeds are come out of that tree, but just one or maybe two make a new tree, right? It's just the law of nature. Relationships. Before you met your wife, how many people do you go through? The average person dates many people before they get married. Very rarely do you have someone you meet right away, get married, never had another relationship ever again. That's that. Most relationships fail. Guess what? In trading, most trades fail. So one of the big misnomers you should be recognized and keep in mind, let's say you have 10 trades, 9 of them fail. Is that a good record or not a good record? Well, you don't know. How much are those losses? If you lose one 9 times and you only win once, guess what? You're -9. The 10th trade, you're up 10. Net, you're up 1 for the 10 trades, even though you lost 9. But if you only lost one 9 times, you're -9. The 10th trade, you win 10, you're up 1. Now, the other guy could win 9 times in a row, but they only win once. The 10th trade, they lose 10. But Adam, I have a 90% win rate. Doesn't mean anything. What matters is the size of your risk to the size of your reward. So I hope I answered the question. If not, please let me know.
Yeah, I think that was a spectacular answer. Imran, let me know if you have additional follow-up here. Let's see. Here's a great question that I'm hoping we could get into. In the book, you talk about the market being long biased. Can you speak to the profit protection team and maybe some opportunities that there might be? Because I was looking at the market earlier. So today it started to rally. Right here, I'll share my screen. Started to rally. And then, it seems like the market, the price got smacked by the declining moving averages.
You can even take that off for a second, Mike. Today's day, one day's action to me, or even any day, doesn't matter. What the idea is, this came from Warren Buffett. In the book, I've got this illustration here of you stand on the shoulders of giants. So you've got Paul Tudor Jones, you've got William O'Neill, you've got Warren Buffett, J.P. Morgan, Livermore, so on and so forth, right? So Warren Buffett every year has an annual letter. It's very dry read. It's very tough to read it, but I've gone back and I've read just about every one. And in it, he talks about the American tailwind. I call it the Great American Tailwind. What does that mean? He's been around for over 50 years trading or investing, and he buys companies, holds them for a long time. And over that time, the last 50, 60 years, since he's been around, the American economy has soared, has ballooned. A tailwind, for those that aren't familiar, let's say there's an airplane, the wind blows it, it pushes it forward. A headwind is when it pushes, the plane's got to fly through it. It's harder to move. So a tailwind helps push. So the stock market, if you go back to the stock market, Mike, and look at a monthly or an annual chart over the last 50 years or 100 years, it's gone from the lower left to the upper right. And that's what Buffett calls the Great American Tailwind. Now, during that time, you get vicious bear markets. He's owned Berkshire Hathaway. I don't think he sold a single share. And the stock has dropped 50% on him, I think 3 or 4 times over the last 50 years. He doesn't care. That's just how he plays the game. It's his way of doing it, right? Here, what is that, the S&P 500? Yeah, there's the S&P 500. Look at that. Think about the wealth that's created. That right there is the Great American Tailwind. Now, that's from 71 all the way up until 2022. So you're going from lower left to upper right. You've had vicious bear markets along the way, but it's going what? It's going up. So that's the Great American Tailwind. It doesn't matter how you want to position yourself. On a day-to-day, there's a plunge protection team. I don't believe in conspiracies, right? It's hard for me to believe there's a secret team of people that go out there and have gone out there ever since the stock market was created to go out there and make sure it doesn't go down. That to me is nonsense. Now, people have a long bias. Most traders and most investors buy. They're not shorting the market. They go long. Most people investing on Wall Street are fundamentally driven, meaning they're buying undervalued assets with the expectation they're going to go up in value. Well, by definition, if something is down in price, is that a better value for you? Or if something's higher in price, if you're making a decision based on the fundamentals of the company, the earnings, the revenue, not on the stock price. So from a valuation standpoint, as the price comes down, it's PE ratio. It's price to what? Earnings. As the P comes down, the price comes down, the valuation becomes more attractive. For fundamental investors, not for technical traders. Technical traders say the opposite, but the majority of investors on Wall Street are fundamentally based, right? So they buy and hold, and they're looking at valuations, they're making decisions that way. So when markets get clobbered, they snap back. That's just there's a confluence of three things happening. The biggest updates happen during downtrends or bear markets, right? Why? Because you have a lot of people short. They have to cover their short. How do you cover a short? You have to buy it back, right? When you buy something, you buy it and then you sell it. When you short it, you sell it first and then you buy it back. So you're short, you're making money on the way down. If it stops going down, starts going up, you have to exit the short. So you buy it back. There's buyers. The second big, force of nature that happens in the market for that plunge protection team, why you see these big snapback rallies, are undervalued investors or investors that like undervalued stocks come in and buy because the price is now cheap in their mind or cheaper. Then you've got a third force that drives markets higher during those plunge protection teams, in my opinion. That's the technicians or the momentum traders that jump in and say, oh, stocks are going up. We're breaking a downward trend line. We're back above the 200-day moving average or 50-day moving average, whatever word you want to use. It doesn't matter. People use all different kinds of indicators. We're overbought, the Bollinger Band, the VWAPs, the blah, blah, blah. There's a million different ones. All with the same, the confluence of those three factors. Shorts cover, undervalued, people that want undervalued stocks buy for the valuation argument, and the momentum traders jump in, and they lead to massive rallies during downtrends. But overall, understanding bear markets, just like traffic, is part of the process. Bear markets are healthy. You might be like, Adam, how could bear markets be healthy? They reset bases, they reset leaders, they reset everything. Recessions are healthy, right? It's okay to have a recession. It's not the end of the world. They happen. Go back and look at the history of any economy ever, anywhere. There's been recessions. And they're okay, as long as you know how to manage your risk and get out of the way. You don't have to be fully invested at all times. That's the other side of it. Just because Buffett wants to stay fully invested at all times doesn't mean you do. If you're not comfortable with that risk, get out and get back in later. You don't have to be fully invested. It's, again, the idea of the book, Mike, is to give you the ability to make your own decisions. And like you said earlier, you make your own rules. Period.
Here's a question from Michael. Michael says, how do you recommend identifying the issues and baggage that we might not be aware of? So that comes back to the blind spot. Yeah.
Great question. So work with somebody, psychologists. You can, if you want consulting services, Mike's got a fantastic service. I'd recommend his coaching services. If you want to come to me, feel free also. Find somebody find someone you trust, and open up to them and be intellectually honest with them. Now, if you can't find someone else, or you don't want to look for someone else, or you're ashamed or embarrassed or whatever other situation you have, get over it. But if you can't do that, if you don't want to do that, understand it's all wants. Then at the very least, be intellectually honest with yourself. Get a pen and paper, get out of your head. Tony Robbins says, if you stay in your head, you're dead. Get out of your head, get on pen and paper, write down strengths, weaknesses. Write down and fill at least 20 of them out, 30 of them out. Get as many as you can. If you can't do it in one sitting, that's fine. Come back the next day, come back the next day, come back the next day. Then write down baggage. What happened to you? Talk about your childhood. Dive deep. I mean, it's good to do this with a professional because they're at least, and again, I'm not a psychologist, but I can help as a coach. I can give you some feedback. I can tell you this is nonsense or this is, good, bad, that kind of stuff as objectively to the best of my ability but if you want real help, go see a professional psychologist is the answer, or a psychiatrist. But even there, understand there's two kinds. There's cognitive and then there's behavioral. So find out, interview them the same way you would interview somebody if you're hiring them, because you're essentially you're hiring them, and make sure they mesh well with you and they understand you and you have a good vibe with them. And if you go through it after a few sessions, you're not comfortable, fire them and find someone else. But be intellectually honest with yourself is the answer, Mike, there. And that's one. Second is, once you identify the baggage, what do? Right? Change it. You drop it. Seinfeld has a great show called Comedians in Cars Getting Coffee. And one of the times he interviewed Kramer. Did you see that episode?
No, but I was just thinking about you being the Larry David on finance. That popped into my head. That's
what my wife calls me, Larry. I love Curb Your Enthusiasm, and she calls me Larry David Finance because all these funny things happen to me. Anyway, so he was interviewing Kramer, Michael Richards, in the show on Comedians' Cars Getting Coffee. You can go watch the episode. And Michael Richards had the problem years ago where he said the N-word in a crowd, and he had a lot of bad depressed because of it and blah, blah, blah. So Seinfeld, this was years after the event, came to him and they were walking in somewhere in LA. It was beautiful weather. And he's like, you're carrying a piece of luggage, baggage, put it down. Just drop it. It's over. It happened. You apologize. It's over. It's not good. There's no judgment here, but it's not a good thing or bad thing. That's not what Seinfeld's saying. He's just saying, drop it. You don't have to, worrying. What's the point of worrying? They say what? Worrying is like praying for what you don't want. Yeah. Or revenge. You're getting pissed off at a stock or pissed off at somebody or whatever, want revenge. Revenge is it's dumb, for lack of a better word, pardon my French, because there's no ROI. It's like drinking poison expecting the other person's going to die. It doesn't help you. So what? You get revenge and then what? Let it go. And that's part of maturing and getting to the next level. The Maslow's hierarchy of needs. It's like my hierarchy of needs. It's like get to the next level. It's like you don't have to let that baggage continue to control you. You can control it. And all it is changing the wants. Just like with the jalapeno, change your want. It's just that simple. I no longer want this to impact me. In fact, I'm going to drop it. Another great line too, Mike, to answer that question is look at your childhood. A lot of your baggage comes from childhood and or your past. And ask yourself, what kind of person did my parents want me to be? Whose love did I want more, my father's or my mother's? And what kind of person did they want me to be? Again, this is not mine. This comes from other people, Robbins, Dalio, all these guys talk about this. But it's a really powerful exercise. What type of person did you want to be as a kid? Right? Rich, powerful, successful, in shape, not in shape, so on and so forth. And then drop the nonsense. Drop the garbage. Don't carry it around anymore. And then create new healthy baggage. Forget baggage, it's a negative term, but new healthy associations or wants. And the fact that you can control your want is extremely powerful and extremely underrated. Just because you wanted to eat cookies for so long doesn't mean you have to continue to want it. I never liked jalapenos. Guess what? I changed it. Now I like jalapenos. It's just that simple. But you have to understand you've got the power to change that association, change that want, and change that relationship.
Brilliant.
Thank you.
It's a question that came from Twitter. Yes. Given the volatile market action, how can we prevent FOMO?
Fear of missing out. So what does FOMO mean in most people's eyes or their mind's eye? It's the market's going up big or it's going down big and I'm missing out, right?
Yep.
So what does that cause me to do? Let's go a little deeper. I'm going to buy, even though it's not the right thing to do. It's not proper. It's not a breakout from a good base. It's extended. I'm going to chase it, hoping that I can get in and ride the trend. Invariably, what happens? It goes against me. It's a normal pullback, and bam, I get tagged. The way you prevent FOMO is by A, recognizing it, and then B, staying disciplined. Every week, the FindLeading Stocks newsletter, I do that because of what? I learned it from Nicholas Darvis, who wrote a book 30 plus years ago in the 70s or whenever he was trading. He was ballroom dancer before there was internet and stuff like that. He couldn't even look at the market during the day. He came back to New York and he was crushing it. And he came back to New York. He was in the broker's office. He got annihilated. And then he left. He went to Paris. He started doing really well again by looking at the markets, making decisions when markets are closed. It removes the emotion from the decision-making process. The way that I remove FOMO and the way you can remove FOMO to this person who's asking, or anyone can, is by having a plan, making the plan when the markets are closed, and then execute the plan when the markets are open. So once a week, and the markets are closed, Friday night into Saturday, the weekends, that's when I do the bulk of my work. I have a report, simple, easy to use. I give my 3 to 5 best ideas depending on the market. Maybe there's no ideas depending on the market. Give a market commentary, annotated charts with clear entry points and exit points. Then if those levels are hit, I'm in. And here's my exit. If I get in at 100, I'm going to get out at 95, risk 5% from the entry, and impact my portfolio. I'll lose 1% or 0.5% or whatever the case may be, and I'm done. So when the market's open, I'm not going to have the fear of missing out because I have my order set before it breaks out. And if the stock's going to go and I already missed it, so what? They used to say, I used to tell people when I used to give the face-to-face speeches before COVID, live seminars, you can't kiss all the pretty girls in the room. Think of the proverbial high school boy who's in a dance. You can't go in there and kiss all the pretty girls. You don't have to kiss all the pretty. You just need one. You'll do very, very well. So if you've missed it, you missed it. Move on. Focus on what you can control and have that plan ahead of time and then trade your plan and adjust it when you need to adjust it. You'll do very, 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 very well because you kiss one pretty girl a year, the one good stock a year, 2 good stocks a year. You'll do very, very well. Very well. 3 stocks a year, you'll do very, very well. So that's how I avoid the FOMO and recognize no matter how good you are, you're going to miss monster stocks. Guaranteed. You'll be in it and sell it, or you might miss it completely. Nobody that I know or have ever studied has caught every single true market leader for every single cycle, got an exact bottom, got at the exact top every single time. I just don't know anyone who's done that. It's not physically possible. Don't set that expectation so high in your mind's eye that you're trying to do something that you can't physically do. It's like someone trying to run a 1 minute mile. Can't do it. You can run a 3.5, maybe, a little over 3 miles, but they shouted the 4 minute mile thing. I'm not a runner, so I can't speak to it, but you can't run a mile in 1 minute. It's physically impossible. You can't catch every single stock that goes up. It's not possible. Don't beat yourself up. Set realistic expectations. That's the next side of the way I deal with FOMO.
Realistic expectations. So then go a little deeper on that. Like, how do you know if your expectations are realistic? Is it measuring it against what somebody else has done? How would you know if your expectations are realistic?
That's a great question, Mike. So the way that I would say the realistic expectations is look at the best performers out there, right? If you want to measure yourself and be successful, is study the top 1%. Who are the best guys out there? The best track records over a long period of time. Don't study 3 years or 5 years. I'm talking about decades, right? Are Paul Tudor Jones, Stanley Druckenmiller, Warren Buffett, and so on and so forth, right? They average about 20% a year, 30% a year. I think Druckenmiller's 30, 31% a year, something like that. Average. Some years they crush it. They're up triple digits. Some years they're down. But on average, or they're up a little bit, right? On average, it's about 30% a year. That is phenomenal life-changing wealth when you compound. They say compounding is the eighth wonder of the world. It really is. When you understand the power of compounding, oh my goodness. All that pressure of having to make money every single day from trading or all day, every day, it's just boom, out the window. In fact, most times of the year, there's nothing to do. If you're an active, I don't know any billionaire that's a day trader, right? So I'm not a fan of day trading. Know your strengths. I'm a big picture guy. I'm very good at the macro level, the weekly charts, monthly charts. I thrive in that world. Dailies, not so much. Intradays, I'm toast. It's like, you ever have bronchitis or any other kind of itis? When I was a kid, bronchitis, I used to split up blood. When I was really young, I got sick and it was really bad. And people look at ticks all day long. Every tick, the market ticks up, the market ticks down. They look at minute charts. To me, that's tickositis. They're making emotional, not rational decisions. So the way that I overcome that, Mike, it's a really good question. Set realistic expectations. I know if the best guys in the world average 30% a year on average, that's year in, year out, by the way. I'm not going to try to be like, I need to be up 500% this year. That's not realistic. Now, the market's returned on average about 8 to 10% a year or 6 to 10% a year, depending on the index you use and depending on the returns, all that kind of stuff. Maybe 12% a year, depending on how, if you go long enough, it's about around 10% a year, give or take. Mm-hmm. Most people can't beat the market. So if you're realistic, again, I don't know you from Adam, pardon the pun, you're not going to be able to beat the market year 1, year 2, year 3. In fact, year 5, year 10. It takes a while before you really get good at it, especially if you're not trained. If you have the proper training, you can accelerate it. Mm-hmm. The good news is you can do it. It just takes a lot of discipline. Now, the realistic expectations is try to match the market. If your market's up 8% for that year, you're up 8%, great. Now, I'm not saying to be happy with 8% returns. In fact, I would, look for better ones. But realistically, if the market's up 20, like last year, the market was up 27%, and you're up 5%, you got a problem, right? So you're up 60, 70% last year, like I was, then it was a great year. Well, sorry, not 60, 70% last year. The year before I was up 70%. Last year I was up 33%. So that was a good year for me. It wasn't a great year, but it was a good year because most of the areas I look at, I like growth stocks, we're getting mauled. We're getting destroyed. And I was up 33% or right around that area, depending on the account we looked at, but over 30%. So it was a good year. The year before was up 70%. So average, it's pretty good, right? So now you go back and look at 19, look at 18, you remember those years, 17, you remember those years were really, really good years also. Same thing, big double-digit returns. Now 14 and 15 weren't good years, but guess what? The market was flat. Nothing really happened in 14 or 15. So a lot of this, realistically, you've got to be able to adjust based on what's happening. If the market's down 30% and you're flat, that's a pretty darn good year. The market's up 30% and you're flat, it's not a good year. So have a benchmark or have something that you can relate it to and be realistic with yourself. Are you just starting trading, like you're 6 months into it, or are you 60 years into it, right? How hard do you work at trading? Are you doing those sit-ups? Or are you not doing the sit-ups? So on and so forth.
Adam, I want to be sensitive to your time too. We've already been talking for over an hour. Time just like flies by.
It really does.
So
I'm losing my voice. I'm good, but yeah, we can. I mean, we have a lot more questions, or how are we doing?
yeah, well, we have a few more coming in.
Okay, let's go until the rest of the minutes.
Minute or two. All right, great. Here's another one from Imran. He's asking about your setup. If I am not wrong, I remember in your book you mentioned that you were not buying breakouts. It was kind of downtrending line breakout.
Yeah, so that's a really good question. So in the book, we talk about early entry points. I have an investment system. A lot of people are familiar with Can Slim, Bill O'Neill's investment system, or other investment systems. Mine is called AMPD, AMPD. And the idea is real simple. You want to, if A is advanced entry points, buy early before the crowd. Most breakouts fail, so I don't buy breakouts. That's A. M is market conditions. Align yourself with the trend. And then P is psychological analysis. Know your state, know the market state. And then D is defense first. Always, always, always respect risk. So in the book, we've got these annotations here. Thank you, Sean, who did the annotations and helped write the book. And there's bullish and there's bearish ones. It's on page, what page is it? 58 in the book. So you could see here, there's two lines. Look at the flag pattern, or look at the whatever triangle pattern. It doesn't matter. U-shaped base, the cup with handle, whatever you want. Double bottom. Pick any pattern you want. Look at the flat rectangle base at the bottom. That's probably the easiest one to look at. On the in the legend there, it says advanced entry points are the stars. Those are downwards sloping trend lines. These are bullish bases, in uptrends. And then the horizontal dotted line with the red circle is a classic breakout. So I'm not buying blindly. I want to be buying with a slight edge. So think of the casinos in Vegas. You've got billion-dollar casinos that are built up and down the strip, and Macau and all over Atlantic City, so on and so forth. Based on what? A slight edge. There's a great book called The Slight Edge. It says what? What's better? If I want to get a flat stomach, do 500 sit-ups today and no more, don't do any sit-ups again, or do 100 a day for the next, for as long as it takes to get the six-pack. What's a better approach? Do 100 a day every day, right? So the billion-dollar casinos are built on what? The house has a 51 to 49% advantage, if not more, on every game played. So if the house loses 7 or 8, 9, 10 hands in a row in blackjack, guess what? Deal another hand. Deal another hand. They're going to keep dealing until the end of time because they know they have a slight edge. The advanced entry points give me that slight edge. I'm not going to be right every time. No trade's going to be right every time. Most breakouts fail. The early entry points, a lot of them fail also. But that's okay because I'm buying closer to support. So think of support as a floor in a room. Resistance as a ceiling. Think of a trading range, right? Or a digestion and consolidation area. Stock goes between, let's say, 50 and 55. Every time it gets to 55, it goes to 50. So on and so forth. That's a sideways flat base. Well, all of a sudden, it breaks above 55. That's a breakout. When it's at 50 to 55, if it's going to do that for 6 months, who's defending it at 50? The big institutions, right? The kingmakers, the whales, the people that go out there and really control the market. Well, I want to buy it as close to that as possible because it's a lower risk exit. If I'm wrong, I'm going to sell it at 49. If I buy it at 51 or 52 on the way up, the right side of that base, before it breaks out above 55, I have a slight edge. And over time, 100 trades, 200 trades, 1,000 trades, 2,000 trades, so on and so forth, you end up winning, and you win really, really big because it gives you a much better risk-adjusted exit. If I buy it at 55, where am I going to exit? 53, 54, 52? You know what I'm saying? So I'm not going to exit at 49, maybe, but if it's a wider base, like 50 to 60, it's very tough to go and exit at 49 if the base is 50 to 60, and you're not really going to give it that wide of an exit. So you're going to get out in the middle. If the breakout fails in the middle of the base, it didn't violate support, and then it takes off without you. How many times does that happen? You raise your hand. That means it's happened to almost everybody. So getting in early allows you to do what? Get closer to support. Not saying you could buy support if you want, but you don't have to buy support. I want some momentum. I want some conviction. I want the market to show me there's an uptrend, obviously pre-existing uptrend, so on and so forth. But show me there's the big volume, the big price is moving up. And then I can get in earlier before the breakout. And if I'm wrong, I get out right below support. To me, over time, over enough trades, that's a slight edge. Because by the time it does break out, especially if it just goes, you can even buy more at the breakout. You can pyramid up, average up into it. You can do extremely well over time. It's all about as minimum risk as possible with the maximum reward, asymmetric returns.
Adam, I have two more things for you before I let you go. The first thing is your ways to contact you. There's your Twitter,
Yes.
there's your website, Smart Money Circle. I'll put that back on over here. And again, congrats on being number one for how many weeks in a row now? Is it 5 weeks in a row?
Yeah, since the book came out. The book came out the end of December, so it's right there. And there's a contact form, Mike. If you scroll down a little bit, people can contact us right there. Right there. You can send messages there. Or you can
Perfect.
sign up right there, enter the information. You can name an email and join the list, and we can send out emails every once in a while. We have the podcast where we interview the big money managers and CEOs for timeless investing advice. And there's some celebrities. We're going to talk about that too. Steve Wozniak, Montel Jordan. Actually, he's the one who sings "This Is How We Do It." He sings it there. Cool. Jeremy Piven and a few others as well. So that was really nice.
Fantastic. All right. So, yeah, everybody go to smartmoneycircle.com. Check out Adam's book. And Adam, wrap it up with question of the day. So you get to ask the audience a question of the day. Could be anything. Could be trading related. It could be something completely off the wall. What question do you have for the audience to ponder?
If you could wave a magic wand, what would you want most?
You could wave a magic wand.
What would you want most? So once you identify what it really is that you want the most, then you could you can create a plan to get there. But without that direction of what you want most in life, now there's business, what you want most in business, what you want most personally, so on and so professionally and health-wise. You can create lots of those little buckets, but figure out what you want most and then create a path to get there. It's just that simple. My friend Gary Kalpam told me this. He goes, the yellow brick road, Dorothy from Wizard of Oz, right? She wants to go to Oz. All right, great. You got to create a yellow brick road to get there. There's going to be the Tin Man, there's going to be the lion, and so on and so forth. But you know the destination. What do you want most? Now, not what do you want? Everybody wants lots of different things. I want to have a six-pack. I want to eat the cookies. Conflicting wants. We all have conflicting wants. What do you want most? Understanding, identifying what you want most, your top one, is critical to being successful, because once you identify that want, you could reverse engineer it and say, oh, okay, I want a six-pack. Okay, I should be doing this, eating that, da-da-da-da-da-da. Okay, I'll eventually get the six-pack, or whatever the case may be. But if you don't have that goal in mind, you're walking aimlessly from where, look, Mike, you're in New York, and I'm in Florida, right? So if you want to come to Florida, you're going to go south, but you now have a direction. Now, you have many ways to get to Florida. You could drive, you could take the bus, you could walk, you could hitchhike, you could fly, you could drive, whatever, right? Take the train, it doesn't matter. But you at least have a direction you want to go. Now, meanwhile, there's another guy, instead of Mike, we'll call him Mitch. Mitch is just standing in New York, aimless, has no idea where he wants to go. Who do you think is going to have a better goal, a better chance of getting to where they want to go? Mike or Mitch?
Yeah, I would hope.
Yeah. So
right, go with the direction.
Yeah, at the very least, you have a destination in mind. Now, it might take you ages to get there, and you might make mistakes walking instead of riding the bike, or riding the bike and not having enough, or driving and not having enough money for gas, whatever. You might have obstacles along the way, and the Tin Man and the lion and blah, 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 blah. And you might take ages to get to your destination. You might never get to your destination. But at the very least, you're focused and you're moving in a certain direction, and you're making progress. This progress is the definition of success for people. People, if they're not making progress, they feel stuck. When you feel stuck, you're not happy. Enter that negative emotion. And therein lies a massive, massive, massive piece of the puzzle for human nature. Kids, adults, doesn't matter. Everyone in between. When you have a goal in mind, even if it's a small, easy goal to achieve, and you do it, you get a W. You win. My friend Moshe and Andy taught me this. They're younger kids. Like, hey, I want W's. We don't like L's, right? We want W's. Just stack the W's. Just stack the W's and win. It don't have to be a massive grand goal. I want to, have a six-pack and muscles coming out of my eyeballs. I want to have $1 billion or $20 billion. It doesn't have to be that massive goal. You could have that goal, but you can adjust it. And the beauty is, Mike, is you can always change your wants. Just because I want to go to Florida, or if I'm in Florida, I want to go to New York to meet you, I might say, yeah, I want to go to New York. And then all of a sudden I find that you're living in LA, and 6 years later, I'm still not making, I haven't been able to get to New York yet. And now you're in LA. Well, okay, I can have a choice. I can keep trying to get to New York, or I can shift my plan and figure out a better way to get to LA. So changing those wants and realizing that you might have wanted something in the past, but it's no longer good for you. You drop it like it's hot, drop it and pick up something else that's a good one is really, really powerful. And then once you find out what you want most, figure out the smartest, most efficient, fastest, quickest way to get it and be relentless. Great books out there by a guy named Tim Grover too, by the way. His name book's called Relentless and Winning. 2 fantastic books. Be relentless to go out there and get it. He was the guy who trained Michael Jordan, Kobe Bryant, and Dwayne Wade, and a few others. Focus on the goal, go out there and get it, and then stack those wins. Get the wins, even small wins. Take them and celebrate the success and go easy on yourself. Who's the person you talk to most in life? Yourself.
Oh, yeah.
Right? The internal dialogue. Be aware of what you're saying to yourself all day. If you have a negative relationship with yourself, change it. Make it a positive one. So on and so forth. So that's my thing. Wave a magic wand. What do you want most? How do you get? And then create a plan to get there.
Brilliant, man. Brilliant, Adam. I thank you so much for taking the time, coming on here, chatting with us for a little bit. And yeah, I can't wait to talk to you again. And congrats on the book.
Thank
you,
and
everything else.
It's always a pleasure. I love being here. And best of success to everybody. And join that smart money circle. You'll get there. Believe in yourself and you can do it.
Absolutely. All right. Take care.
All right.
Bye, everybody.
Bye.
Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Mara Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.